use blockchain to address, and I think again, a lot of these have been touched on today, within the finance side of the financial services industry. Who would like to start off? Anyone? No?
Okay. I'd say education.
Yeah. Yep.
A lot of people here have said to me today they spend all their time going around and explaining what it is.
Yes.
I gather at Davos this year, I wasn't cool enough to be there, but I hear that for the second year running, the blockchain panel was the Bitcoin lovers versus the cynics with regards to finance, which shows a very low level of understanding. So the thing that scares me the most is I want a blockchain, I need it by April because my boss has said I need one in by then. It's the lack of understanding, and that's the hardest thing to counter. There's lots out there, but how do you sort the wheat from the chaff and work out how to learn?
Gavin, and typically that's also at executive and board level, where they're having to make strategic decisions and not really understanding underlying technology.
There's a fantastic Dilbert sketch where pointy-haired boss goes to Dilbert and says, I've just read about this blockchain. I think we need a blockchain. And Dilbert goes, I'm not sure he knows what he's talking about. Let's see. Would you like it to be purple? And the boss says, yeah, that's my favorite color. So I think that's exactly where we are with education right now.
Gavin, just following on, you've got a lot of exposure to that in the UK. Where do you find, what sort of forums, or how do you think we go about solving this problem? Is it specialized academies and short courses, or just getting the right groups together as conferences like these?
I'd say get off your backside and stop being lazy and being expected to be spoon-fed, actually. Like when I look at the regulators, after 2009, the regulators were all bad because they were beating everyone who wasn't a regulator or protecting us as individuals. The regulators on this have been incredibly proactive. The proof of concepts they're running, the accelerators they've done, they've changed their graduate hiring programs because they recognize they need different skills in the regulators. From the ones I see most, which are all European, Banque de France, the Bundesbank, the Bank of England, Project Jasper, the Bank of Canada, looking at digitizing the CAD, the Riksbank, looking at digitizing the krona. In some ways, the central banks and regulators are ahead of many corporates. If they've learned, and they have very restricted budgets for this sort of thing, I think you just need to make the effort. There's enough material, you can pretty quickly work out what rings a bell with you.
Great, thanks.
I think the other thing that's important to consider here is the fact that this technology is not as mature as it needs to be deployed in a live environment. And so even if we educate and talk, which is obviously part of the process, we also need to give it some time for the technology to mature. And I think that that's a perfectly reasonable way to go about this.
Great. Astrid, anything you'd like to add?
I think that's probably one of the biggest issues, is not just the lack of education or awareness or understanding, perhaps at a board level, but the skepticism as well about, is the technology ready to be implemented? And, I think because of all the hype, everybody needs to have an answer for that. And the reality is we just don't have those answers. We're all exploring and trying to understand, and we have to make business cases. You can't just implement something like this because you think it's the latest thing to do. You have to build a case for it, and you have to understand what efficiencies you're generating. It's easier to implement these things in areas where you've got legacy systems because it's a much easier case to make. But in an organization like Straight that has recently invested in upgrading legacy systems, it's just not such an easy case to make.
Great, thank you very much. Andreas, perhaps just to take a little bit further some of the themes from this morning, particularly around digital identity, and you had quite a strong view on that, and we're going to hear from a startup tomorrow who's operating in that area in the financial services industry. How do you believe blockchain and digital identity can really unblock pain points? And the second part of the question is, do you believe that there are any particular Africa or developing economy use cases that might be different to developed economy, where there might be some early wins?
I think the focus on identity is misplaced. For me, identity is a poor proxy to credit risk, and we've confused the means with the ends. So the reason identity has become such a focus is because it's a convenient proxy at least in the kind of privileged circles of the West, for identifying credit risk, whereas at the same time, it is responsible for, this emphasis on identity is responsible for economic exclusion around the world. So the answer isn't get more people to have identity, have more centralized controlled identity, make sure everybody's identified in a transaction. I think the real answer is, do we need identity to do economic inclusion, and can we do economic inclusion on a basis of anonymity? I think privacy is a much more powerful outcome of these technologies. And the idea that we can bank people without identity is extremely empowering. I think that can make a very big difference. So do we really need identity in order to establish trust between individuals who are transacting? Bitcoin, as a platform, provides an example that says, no, we don't. And I think we need to explore that a bit more. The emphasis on identity, I think, is an illusion. And I'd like to think we would be better off in a world where people are able to transact more freely without that.
Yes, it's great. I think last year we actually had a panel, and the conclusion that we were focusing quite a lot on KYC, and the general consensus that KYC was predicated on the house of cards. So it was really a box-ticking exercise that didn't actually prove anything other than meeting some compliance criteria, but which were actually not that practical and not that grounded in fact.
Yeah, so I'm involved in a digital identity startup, and which is based in the US. And what's really interesting for us is that the business case suggests that everybody, especially banks, should be sort of piling in there and going, yes, please give it to me. But the reality is that there's a perception that there might actually be a first mover disadvantage of making the wrong choices about what that identity platform is going to be, and that frankly some of the costs associated with fraud and such matters is actually fairly insignificant in the bigger scheme of things, and that there just isn't, as much as you would think that we're just sort of moments away from it being adopted by banks. It's a super hard sell, and I'm not sure we're going to get it right this year.
Anyone like to add anything to that? I'd like to move on to Africa-specific use cases for blockchain. And we've heard a lot about the unbanked, and again, Andreas, you did have quite a strong view on that this morning. But do we believe there are specific use cases around developing markets where the blockchain could either empower or create product sets or sets of services that people haven't had access to in the past? Anyone like to take that?
Well, I mean, in my mind, what we're seeing right now is that, especially with the case of Bitcoin, it's thriving in areas where fundamental institutional money has collapsed or is in grave crisis, by providing people with alternative options or perhaps even an exit and safe haven opportunity. I think that's going to accelerate, and it's going to create a lot of friction with traditional institutions, because this force of decentralization lays bare the illusion of stability of government money. And the idea that a government, in either trying to bail out the banks or in trying to bail out its own debt, will debase a currency and take the entire population hostage with it on this crazy roller coaster down to wheelbarrows full of useless cash, which we've seen happen again and again and again and again in so many countries. And Bitcoin, not yet, but within probably a decade, will become a viable exit option for people. And when it does, it fundamentally changes the dynamic. If you can no longer take hostage the population, you can't apply that policy. Currency controls are useless. Debasement of currency is useless. People will simply exit. Now, at the moment, that is an option that's only exercised by those who have the highest levels of technical experience and the means to exit. But because it drives higher premiums and arbitrage opportunities for them, it's funding all of this infrastructure that makes it easier and easier. Essentially, the exit starts off as a little rotted, one-lane road, and the arbitrage opportunities will convert it into a 5-lane highway where suddenly 10, 15, 20% of the population can exit. And that will change the dynamic of state-controlled money. I think especially in Africa. But we're seeing the same thing in Latin America and Southeast Asia.
So it's consistent with developed markets. I think one of our better examples, and probably quoted a little bit too much, is the example of BitPesa in Kenya, which was a case of where the regulators actually just stood back and let it happen. So that would bring me to my next question. Do you believe the regulators in developing economies and developing markets should be doing more to stimulate the digital crypto and cryptocurrency economy?
So, Pat, you want to take that?
Yeah.
So I think that, I've only really had experience with the regulators in South Africa, insofar as developing markets are concerned. But I think that so far my experience has been positive, and I think that the approach has been, it's very small in terms of value. There's no reason to believe that it will, in the short term, affect our ability to enact monetary policy. So we will adopt a wait-and-see approach and monitor. So engage, monitor, understand the technology better, and I think that that's the right approach to take.
Yeah, I would agree with that. I think regulators actually around the world have probably been very open-minded about this. And I think a wait-and-see approach is probably the best approach at this stage.
Great. Anyone else?
I wonder how regulation fits in. I was really impressed by the startups Lou showed. Insurance, through to moving the money in Western Union, ripping you off for however many percent. But we tend to use those things either because we have no option across, that's a small percentage of people, but the majority of us use it once it gets a stamp from a regulator saying, and if it goes wrong, you can call this hotline and we'll sort it out for you. So this dynamic of regulation versus innovation, stifling or controlling, I think is possibly the most interesting thing. And if done wrongly, it could hamper innovation. So far, I've seen nothing of the regulators in Africa. Those I've seen in the West, many are keen to make sure today's regulations do not hamper innovation, even down to looking at Dodd-Frank. Does that stop innovation? And they've said, if so, they'll amend it, assuming Trump hasn't destroyed it.
I think it's a very, very difficult fit because at its fundamental nature, these technologies are really forces of decentralization. Regulation itself is a centralization force. And so it undermines, these technologies actively undermine these forces of centralization. And the question we have to have is, what is the purpose of regulation? Regulation doesn't exist for its own power. It exists to serve a purpose. And if you can serve that purpose more efficiently with programmable money, with security controls such as multi-signature controls and governance controls within the currency, within the system of programmable money, if you can do consumer protection as a programmable smart contract, why do you need a hotline? And who's manning that hotline? So the one question is, do you really need regulation? And then the next question is, if we do need regulation, are these the right regulators? Because the history of regulation, especially in Western countries at least, over the last 8 to 10 years, has been one of captured control by the regulated industries, inability to prosecute mega crimes, crimes that involve millions of victims, like, for example, the mortgage foreclosure robo-signing scandals that happened in the US where no one was punished. And effectively, regulation is treated as a cost of doing business, and the regulated industry gets away with an enormous amount of damage to society. So then the question is, if we do need regulators, which I don't think we do, I think we can do a lot of this with smart contracts, then I don't think these are the right regulators. And the models that they apply, KYC AML, are a failure across the board in achieving any of the stated goals. And they don't really apply to these new technologies. So I'm not interested in really engaging with regulators because I see it as a pointless exercise, a completely pointless exercise. All the most interesting things that are happening in this space are outside of the purview of regulators, are changing the fundamental relationship between individuals and each other and individuals in the state, are changing the structure of this industry, and they're decentralizing things. So this is going to be a much bigger and more difficult kind of confrontation over the next few years.
Great, thanks.
But isn't that always the case when you have a sector, a small growing sector that isn't regulated. Isn't
Yes.
always evolved this way. So what's different? It's regulators only need to step in once the broader potential harm, I suppose, to society.
Right,
starts.
but that's not how it's worked in practice because, the financial industry has become one of the coziest, most centralized, cartelish industries in the world, and they very much have captured the regulators top to bottom. And so what we see is innovative technologies work best when you don't allow the industry that is being, if you like, offended or assaulted by competition to write the regulation. If the phone companies got to write the regulation of the internet, you would be paying into a little slot next to your webcam for every minute of conversation on Skype. If the railroads got to write the regulations about automobiles, they'd require someone to run ahead of the automobiles waving a red flag. Oh wait, they did in England. And so the
Still
point
do.
And exactly. So the point is, the most important thing is you can't let the incumbent industry write the regulation for the very people who are disrupting them.
Does that mean that you therefore can't use the technology in that field for now and it has to work in parallel, like we're seeing with cryptocurrencies, which are in parallel to fiat, and that you develop it therefore in a parallel set of businesses or opportunities, and as they grow in popularity, the other side has to take notice and has to respect how they're governed and how they operate?
I mean, I think that's going to be the case, but I think that happens regardless. There's no stopping that trend.
Yeah, and so I think that the other thing that's worth saying here is just that what's become really obvious is that financial services regulators in this country have worked very closely with regulators elsewhere in the world, particularly in Europe. And so there's a lot of, we have to implement something so that we can meet certain requirements and tick boxes and say, yes, we do comply. And that's more a function of the way that the financial system works rather than a strong desire on the part of local regulators to get involved. So I think that part of that engagement is to help make better decisions about how to regulate rather than avoiding engaging with regulators and creating a risk that a mess is made of it.
Right, thanks.
Sorry to belabor the point, but I mean, I do think that regulators around the world are, and policymakers are encouraging more competition. And that's probably why they are adopting a sort of a wait-and-see approach around some the cryptocurrencies and what we see happening. And I think that's very positive, Yes, you talk about incumbents influencing the outcome of the regulatory framework. But I think what's also happening is all incumbents are being put under immense pressure. And in the end, what we have are better results for society.
Well, I don't see that really. I think that we're seeing a lot of the regulation focusing on antiquated mechanisms of control like KYC, AML, which are not helping consumers at all. And what they're doing is they're perpetuating the status quo. In fact, in some places it's even worse. I think New York is a very good example where the regulators took a proactive approach that was very self-serving, but it's created a complete mess for the New York financial industry. Is now they find they can't even play in the sandbox with the cryptocurrency space because the license actually ended up backfiring in their face. When regulators act like that, however, one of the interesting things that happens is it doesn't change where Bitcoin's going. It doesn't change what cryptocurrencies will do. It simply makes them move out of that jurisdiction. And this is the fundamental reality, is that this is a truly global phenomenon. There is no corner it can't move into. And all the regulators can do is affect the regulated industry within their jurisdiction. And that's a very narrow mandate. That doesn't change much at all. So we'll see how it plays out. I think at the moment, part of the reason we see a very soft touch by regulators is because these systems are not yet disruptive, challenging, and big enough to really offend some powerful interests. When they do become that, and they will, you're going to see a change in tune.
So
I
you see
guess
this.
the peril there, Andreas, a little bit is we've seen it in the taxi industry with Airbnb, with Uber, and we've seen it in the hotel industry with Airbnb, and those battles continue to this day, across the globe because they're starting to feel the pain. of that technological disruption. And I guess what you're saying is that's coming.
Yeah,
Still down
imagine
the
if the
road.
taxi industry was a $24 trillion industry
Yeah.
that owned a lot of governments.
Yeah.
And you would have seen a very different tune from regulators against Uber. That's what we're going to see with cryptocurrencies.
Well, we're going to see something that's very similar to electronic gambling, I think. So, where effectively, countries like the US outlawed it, and then over the years realized that they can't actually control it.
Right,
So,
absolutely.
So it's going to be a very similar kind of.
Yeah, it's going to create a lot of isolation for a lot of people who are going to be cut off. So it reminds me of this headline that's famous from the United Kingdom when they had this very big North Sea storm. And one of the newspapers published a headline that said, "Europe cut off from Britain."
Absolutely right.
And that's exactly what we're going to see with regulators. They're going to say, Bitcoin cut off from New York. Well, guess what? Bitcoin doesn't give a damn.
Can I talk?
Yeah,
Can I
sure.
make a comment about one of the things that I think is a terrible idea to use distributed ledger technology on, which is to issue fiat on it?
Oh, yes.
Why would you do that? Why issue fiat?
Well, what's interesting about it is that so far, the only conversations that I've been remotely encouraged to have in this space have tended to be around governments which are not democratic. They have specific interest in maintaining monetary control. They have no ability to control the current cash markets that exist and the black markets that exist. And so the specific intention of it is to exercise more control. It is not to create a better system. So issuing currency on distributed ledger technologies is a terrible idea for a number of different reasons, but the main is just that it is an instrument of control, not in everybody's interests.
So that makes
it's
it-
one of the questions I get most often when I go around the world, and people ask me, which country do you think will adopt Bitcoin first as its national currency? That is a terrible idea. The whole point of this is not to have monopoly control and centralized control over money. Forcing people to use this is just as bad as forcing them to use the euro, for example. I say that as a Greek,
That's a really good point. It would suggest, from what you said, that this is, from those closed groups' perspective, this is threat, not opportunity.
Right.
Because if you don't get with it, you will just become less and less relevant as the voice of the world, those not in those small groups, speak and use, and it grows.
It's
Bitcoin.
perpetuating this attitude that currency is a zero-sum game of monopolistic nation-state flag-carrying monies that can only survive or thrive if one of the other monies depreciates in relative exchange rate. That model, which has existed for almost 100 years now, is what is being challenged by alternative currencies that don't belong to nation states, that do not play the zero-sum game, and that are optional, voluntary, opt-in systems that anyone can choose to use or not. And I think that's the real challenge. It's a challenge of control, not it's not about whether it's digital money or not, because all money is digital. It's about whether it's free digital money or totalitarian digital money. And that's a choice we're going to have to make as a society. The idea of fully surveilled, end-to-end financial control under a closed system of centralized governance is what is being challenged. And to me, that choice is very, very obvious.
Great. I think then just to close before we take questions, Gavin, maybe you can field this, and if everyone can just sort of look into their crystal ball and look forward a little bit, and you're welcome to look forward 1 year or 2 years. Where do you believe blockchain and DLT is likely to make the biggest impact on established legacy systems, enterprise, business, or not, as the case may be, in the next year to two?
Where do I think? Well, I've just had my views changed a bit. That, I feel a bit like sort of one of the bad little minions of that sort of Lord of the Rings, one of the orcs or something approaching, and this is a guy with long hair and the big sword all the girls like. That's him.
Thank you.
The one my wife likes. Well, so I think I do see the point. It's a really well-made point, this discussion about whether you shouldn't try and fit today's rules around something new. So today will keep going, the markets and the governance around them, whilst other innovations challenge them, but the two don't have to overlap. So distributed ledger technology will make financial markets more efficient in the short term, and I think the people who have the most power actually are not the banks anymore. I think it's the buy side, the investors, the asset managers, and they want better control of their information and their data, and now there are no more excuses as to why they can't have it. So I think the bank revenue models are severely challenged, and it's a shift of role and participation. You saw BNP announced 10 days ago they're going to spend $3 billion on digitization, close all their branches, and just enable their customers electronically. I know, if you take your point, actually you don't need BNP in the first place, so you're not really helping much. But they are trying to say that in the next 5 to 10 years, to be relevant, we have to be more transparent and fairer about pricing and give some control back, and that is what will happen. You'll see better efficiency. What I hope it doesn't do is spark leverage again. So by efficiency, the first thing everyone heard in finance was zero settlement. I can settle straight away, so I can do more, so I can get bigger, and you go back to the leverage of '08. And it took about 3 months, the normal period of time in financial services, for ideas to flip again, to realize that actually that doesn't help. So pragmatism ruled, it becomes optimized settlement rather than real time. So I think better efficiency, and it should be lower cost. It should mean you don't pay 1% to your pension provider just for making you no money, for example.
Great.
That's what I think.
Andreas, your view on the next 2 years? And
I don't know about 2 years. I think this is going to play out on a much longer and deeper level. But to me, this is not about corporations. This is not about governments. This is fundamentally about individuals. This is not about the existing systems giving control or giving permission. This is about individuals taking control that rightfully belongs to them over their own money, over their own future, over their own destiny, and over their own sovereignty as individuals. And that is powerful. So who is this going to affect? 7.5 billion individuals who will seize control without asking permission from anyone of what is rightfully theirs.
I'm dying. Can I just ask just one question? Who do you bank with?
That's a funny story. I bank with a small credit union that just got bought by one of the bigger banks, and within a week it has become obvious that I will need to change banks again to go to an even smaller credit union. Unfortunately, I can't debank myself fully yet, but I'm working on it.
Okay.
Esther?
Well, I'm hoping that we're going to see over the next 2 years probably some changes in the payments area, specifically remittances. I think that's an obvious case also in Africa. And then, I think that all the things you talked about are really good for incumbents. And I think, people, certainly in capital markets, are under a lot of pressure because end investors are fed up. They don't want to pay the fees. Mm-hmm. So everybody in the chain needs to think about what they do, and we're going to see some changes there. It might not be 2 years. I think it's probably going to take longer, but I think it's an inevitable process, and I think all institutions in capital markets and financial markets need to take a long-term view and ask themselves how they add more value for less cost.
Or value.
Yep.
Great. Lou?
So Gartner tells us that 2017 is going to be the year where everybody says distributed ledger technology is not necessary any longer. I think that in 2 years' time, though, or within the 2-year time frame, I think not a lot will change, and then suddenly everything will change.
Yep.
And I think that I'm more interested actually in understanding also Tanya showing sort of there's a lot of technology that's sort of coming through on the peak of expectations. And once you start to have some of those technologies work together, some really fundamentally different things start to happen. Like something as simple as if you have Internet of Things combined with artificial intelligence, combined with blockchain technology, that changes everything.
Good one. Everything's going to change. Great. We're going to take some questions. We'll start. That's great. Microphone on its way.
Thank you very much. Can you hear me? Yeah. Thanks very much for your thoughts. I've got a couple of questions for Andreas. So first of all, on behalf of all of us, I think we love you. So.
Thank you.
But 3 questions, and if we don't have enough time, I'd appreciate speaking afterwards.
3 questions?
Yes.
Okay, make them quick.
The first one is your ideas, if you could elaborate on identity. Because this whole idea of financial inclusion without identity, that makes sense if you've got collateral, but if you're going to give some money to someone you don't know and hope that they're going to pay you back, how does that work in your framework? Because that doesn't make any sense to me. Second one is, what are your views on law? Because governance, and you seem to be disparaging the regulators quite a bit, and Bitcoin is great, but it's a digital thing that's born, lives, and dies in the digital space. You can't eat it, etc., etc. We live in a physical world where things cannot be governed by code. So what are your thoughts on law? And are you against governance in total? And then the third question was just your thoughts on the probability of a Bitcoin fork and what the implications of that would be.
Oh boy.
I've got this. So collateral first.
Okay, so on the first one, if you look at the statistics, the vast majority of credit extended in the world is on uncollateralized loans, right? So you'd be surprised how little of lending happens with collateralized loans. I think there's an opportunity to open up a whole middle segment here of micro lending where you have massive diversification of borrowers, massive diversification of lenders on very, very small amounts with collateralizing not assets but productive capability. And you can do that with digital currencies in novel ways. I don't know if it will work. And this is one of the areas where traditional fractional reserve lending is something that an asset-based, value-based currency like Bitcoin can't do. You can't fractionally lend Bitcoin. It's not possible. So that might be an area where banks have a continuing role to do that. But I have a lot of hope for uncollateralized loans. The second one is about governance and law. And to me, the real question is whose law, right? And if you live in a globalized society, one of the problems becomes, do you have least common denominator law, where we all have to succumb to the strictest interpretation of somebody's morals? Do you have universal standards law, which is pretty thin and narrow on the ground, right? Or do you have a jurisdiction choice that becomes the choice of each individual? Well, guess what corporations do? They do the third thing. They choose jurisdiction. They do choice of law. And so I operate as a multinational corporation with one person. Practically, I do that. There's an interesting future in which most individuals start operating as multinational corporations and leveraging the tools of international jurisdiction, arbitration, law, and things like that in order to gain advantage in this new globalized world. And Bitcoin is one of the tools you can use. And the third one is, I think it's extremely unlikely that we're going to see a fork in Bitcoin. It would be very strongly resisted by the entire community because it's a very different situation than for example, Ethereum. And I don't think you're going to see that. There might be attempts to do it. Any miner who attempts that is going to very quickly learn a very painful lesson about what the economic majority means.
Yeah, I just want to ask you a question. Would you extend an unsecured loan to an anonymous person?
Yes, I already do. Can I borrow some money? So yes, absolutely. I use a platform called Kiva. Who's familiar with Kiva here? No. Okay, great. So I extend thousands of loans, in fact, that are totally unsecured to thousands of individuals who I know nothing about, and whose only incentive to pay back is social pressure. In fact, group lending on Kiva is more effective and has a lower default rate, primarily because of the social pressure within that local community to repay and honor that loan. So I think it is a viable model. And you know, maybe I'm being naive, but in general, I think that we can look at the better nature of people. And there are ways to structure things other than, I'm going to come seize your assets.
Great, thanks. Nizam.
Firstly, thank you for a really great discussion. The US Fed was established because of two sets of events. One is more than 100 banking failures every single year prior to 1917, when the bank was established as a lender of last resort, and then the Great Panic of 1907 was a consequence thereof. The current 2007-2009 crisis is generally regarded as a consequence of repealing Glass-Steagall and a whole bunch of other legislations from the Clinton administration. The 1920 Great Depression was also the regulation that regulated that particular industry was a consequence of a crisis. So when we look at regulators, it appears as if they respond to crises to prevent them. I think that there's not a lot of people that would say, let's can all regulation and let's trust everyone, because laissez-faire and free markets, Greenspan said that, right? That just trust the market and things will turn out for the best. My question is that a good thing to be promoting less regulation in a world where so much volatility, so much uncertainty, and so much distrust exists?
I'm not, so I don't know if that was directed to me, but I'll take a stab at it. I'm not promoting less regulation. Quite the opposite. I'm promoting one of the most highly regulated, mathematically regulated, decentralized systems that provides absolute certainty as to the issuance of currency, the interest rate, and the expectations and the execution of a smart contract, which cannot be violated by anyone, rather than regulation by the whims of 12 people who are unelected, who are currently preventing the next 100 bank failures by sacrificing an entire generation of 20-year-olds who won't see a job for the next decade on the altar of a destroyed dollar. So if that is the choice, I'll go with mathematical regulation, which is predictable.
Anyone else?
I think that it's a. So one needs to consider what is the purpose of the regulation, and I think in the case of financial services, it's about that custodian relationship that exists, and it also being an instrument for monetary policy. So I think that one can live in a world, and certainly we will, where I can understand why fiat money and associated financial services are regulated, while at the same time would resist heavy regulation of a peer-to-peer system like Bitcoin.
That's a really great point, and I think it bears emphasizing even more. Custodial control over money absolutely must be regulated, because the basis of all regulation is if you give your money to someone else to control, they usually run away with it. And most banking regulation is based on that simple fact. So that absolutely needs to be regulated. But the answer is not to do that in these cryptocurrencies. It's to end custodial control over money, which we can do for the first time. We don't need custodians. And so if we don't need custodians, we don't need the regulation of custodial relationships. If you keep your money on an exchange, yes, you should be worried about whether that exchange is well regulated, because it's a bank. The fact that it uses Bitcoin doesn't make it any different from a bank. And those things do need to be regulated.
What about the view that this is really Lord of the Flies, and throughout history, where there's been happy utopia, chaos, confusion, throw paint and eat cakes, eventually someone becomes strong and a natural leader and abuses, because human beings have it in them, this tendency to some form of economic incentive, whether that's more cake, being in charge of the island, putting the kid you don't like up to be roasted. So how long does this all working together in something where mathematically there are rules, but you're relying upon human beings being happy to have no last resort other than the machine? And most of us quite like to know there's a police officer or a hotline or mum or dad, or we all like to know there's somewhere we can go to get law and justice.
That's because we associate trust with hierarchical authorities.
Yes. Yeah.
And the whole point of this is to remove hierarchical authorities and create flat, fluid systems of control that don't have hierarchies. You can't climb to the top if there's no pyramid. And if In these systems of cryptocurrency, we create hierarchies. Some nodes are special, some systems are trusted, and we start centralizing again. Then we will need to go in and disrupt the whole system and decentralize it again with the next version and the next iteration. We have, for the first time within our technological grasp, the possibility of doing massively decentralized systems of power that can be trusted. That is a new thing. And if they become centralized, all of the problems of human nature come back. You don't solve those. The architecture of centralization will naturally cause the sociopaths to rise to the top, pull up the ladder behind them, and take control. Always. So all you can do is flatten the structure again. Now, if Bitcoin fails and becomes hierarchical and centralized, we will need to disrupt Bitcoin with Bitcoin 2.0. But the good news is we now have a recipe outlined in 9 pages on a white paper that a 14-year-old can code in a weekend once they understand how it works.
Does the DAO become a DAC as countries take on government and ruling through code?
I think that's a bit too sci-fi for this conversation. In that, I mean, we may see fundamental changes in governance, but we don't need to think of that as changing the way governance operates within a nation state. We can already carve out a small island of existence, which today is the internet, which those of us who operate, work, live as digital nomads or as digital professionals on the internet, we have this little jurisdiction where governance works under different rules. It works on a global basis with network-centric systems of trust and governance. I think that gives us a model and a sandbox and an experimental system that we can use to learn about how we can do governance on a greater scale. The nation state was a great equalizer. It helped industrial society redistribute wealth and become much more equal and empower billions of people. Great. It doesn't scale. It doesn't scale to 300 million people in the European Union. We've seen that now. It doesn't scale to supranations. So it scales when you have local control and local government fantastically. Once it stops scaling, you don't just say, oh, well, we don't have anything better. You say, what does scale? And we don't have an answer yet, but we have a little spark, a little idea that might work, that gives us something that scales to 500 million people, and then maybe 1 billion people. And then we can start talking about governance on a planetary scale. But we're not going to address that with the social structures of the 18th century. That's not possible. We already know they don't work, and we're seeing that play out in Europe in real time right now.
It sounds like a digitization of when Atlas shrugged. It really does, that people who are just tired of playing by rules they think are there for no good real reason decide to go off and have their own space where they work and support with each other on their own terms.
I mean, but part of the voluntary aspect of that appeals to me. I know a lot of my followers are going to hate me for saying that Atlas Shrugged itself is a bit of a puerile 14-year-old fantasy of how the world works. Oh boy, am I in trouble now.
And Greenspan's going to hate you.
But the real world is far more complicated, and it doesn't necessarily work that way. But we do have an idea, and I think this is a generational thing. There is a generation of people who have grown up with the internet who recognize that you can do things on a global scale differently than we've done them before. And maybe it takes my generation passing out of the picture before that becomes real.
Or several.
Thank you. Last question.
So just in terms of this point of more massive adoption, there should be goalposts that you've envisioned that has to be reached, or a strategy that could be supportive of us getting to this utopia that cryptocurrency could be, that disrupt the system. Some thoughts on what those goalposts are and where the support in guiding you towards that sits?
I think one of the expectations that we must get over is the idea that this will happen in a linear fashion, or that it will happen in a smooth and uniform way around the world. We're going to see pockets of adoption where the need is greatest, So you wouldn't expect Venezuela to be a hotspot of digital currencies until they trash their own currency, and suddenly it becomes a need. If you're a Westerner who has Visa, do you really need Bitcoin? Because if you're a Venezuelan right now, you need Bitcoin. And so that changes the equation. I think we're going to see little islands of adoption pop up where there are crises, where a gap needs to be filled. And specific applications like remittances, import-export, cross-border transactions for multinationals and things like that, again, where today's systems have the highest level of friction, cost, and delay, where you can serve the needs better with these currencies. But the other interesting thing, I think, is our appreciation of what happens with an exponential curve, which is that for the vast majority of the life of an exponential curve, it looks like it's flat and going nowhere. And when it reaches parity, it's vertical. And so at the moment it reaches parity, it's a month away from doing 10x what the other system is doing. Things will, as you said, nothing will seem to be happening, and then everything happens all at once. Decades where nothing happens and weeks where decades happen.
I think it might be unintended consequences. I saw a panel of people talking about how all their companies are making their own payment systems to link to their white goods. I'm really tired of the immediate real estate renting of my PC screen. If I open my fridge and it's already ordered the cheese through my phone because I'm going to cut the power to my house. So the idea that it's like Andreas says, but a slightly different theme, the idea of control, Internet of Things, money and payments, that would push me towards something like Bitcoin.
Yep.
So if competitors come up and they push us too hard into this, we're going to link you into everything, I think that could be the start of the curve, and the older generation getting used to it. When your mum and your dad start to use WhatsApp and Apple Pay, and the day it suddenly picks up in a different demographic, probably my generation, not theirs now. So the goalposts are two. One is pressure to do something else that will just upset us and make us go towards it, and the other will be more retailers and my mum and dad using it because they now know how to.
I love the idea of my fridge ordering cheese, that I don't have to go shopping.
What about if it's the wrong cheese?
I think to that point and to Andreas' point as well, we're going to see that it's going to be used as a store of value before it's going to be used as another form of payment.
Yep.
So once we see that suddenly everybody has got a couple of Bitcoin that they're kind of keeping on the side just in case the system goes to shit, then we'll see it start to be used as a payment mechanism.
Easier to trade than gold.
I think we had one more question right at the back. We got one here as well.
Just a quick point of clarification for Andreas. On the question from back there, sorry, let me just quickly what I want to ask. Yes, it was a question on the hard fork possibility of Bitcoin, and that this would affect Bitcoin greatly, but it didn't affect Ethereum so much. Which Ethereum fork do you mean? Do you mean the DAO debacle? And then I'm hoping it wasn't that one. So if it was that one, why would you say that's fine in Ethereum's case? It's current scale, or?
I think every digital currency gets one mulligan in the first couple of years. Bitcoin did its mulligan in 2010 when we mined 19.2 billion Bitcoin in a single block by a bug. And everybody went, okay, just roll that one back. This isn't a precedent, moving along, right? You can do that in the early stages, and Ethereum may get away with the mulligan of reverting the DAO once, as long as it doesn't set a precedent. The problem with Bitcoin is now we're talking about a $20 billion economy that has a lot of people depending on it. You can't do that anymore. So the idea of doing contentious hard fork that leads to Bitcoin, Bitcoin Classic, Bitcoin Classic Classic, and Classic Lite, and just this fragmentation and balkanization will destroy so much value that I think you're going to see a lot of people resist it. And part of that is because of its nature. In order for it to be a store of value, you can't have any shenanigans like that, right? And in some cases, that will mean that we are going to face much higher fees in Bitcoin because the easy answer to scaling doesn't exist. And until we can do the hard answer to scaling, we'll do nothing because you do not do maintenance on the 777 while it's flying casually, right? And you've got a $20 billion economy in flight ticking away every 10 minutes for 8 years. Messing around with that is very strongly resisted, and that's one of the benefits. That's how you build store of value, by making it not respond to the whims of a majority, even if it's a significant majority. And I think that's one of the fundamental differences in the culture in Bitcoin and Ethereum. And that's okay. Ethereum needs to iterate much, much faster in order to get to maturity and achieve the things that it's trying to achieve with smart contracts. And that means breaking some eggs along the way. Bitcoin can't do that anymore.
So the question, I don't really know how to ask the question. It was something I actually wanted to ask Lou earlier when I was preparing to speak. I agree absolutely with the ideology and the ethos and the thought behind the social revolution, at least, behind Bitcoin and what it's achieving. I guess you made a comment during your talk about the miners in China and the fact that there's economic reasons why mining has moved there. And I agree with that. I think mining has moved to where it's cheap and makes the most sense. But my concern is that, to me, still feels a little bit like Bitcoin's Achilles heel, is that that is the only centralizing force in the Bitcoin ecosystem, is that mining moves to where mining is cheapest. And cheap mining tends to happen in small pockets. And all you need to circumvent everything that is Bitcoin is to control a majority of that. So do you think that, and I appreciate the chance of that is low, but do you think it's possible? And is that something, as the Bitcoin sort of board and sort of senior people in the community, that concerns you at all?
So I think that the first thing is we've reached a point now where the ASIC chips are 14 to 16 nanometers, and the life cycle of that hardware is much longer. So for a long time, it was sort of 3 to 6 month upgrade cycles. And what that effectively meant is that you need to be close to source of manufacture for hardware as well. So that I didn't talk about that, but that was an important part of that as well. And we're now at a point where it is increasingly possible and desirable to source that same hardware from anywhere else, which tends to lead to increased decentralization of exactly where is that kit located. So I don't think that is a concern. And I think that the other thing that was brought to light again very recently was that we shouldn't forget that the purpose of the nodes is to validate the transactions on the network. And so the fact that the miners and their kit are located in one specific geography is not a reflection of the fact that they can somehow assert control over the network. And I think that the risk of that is low. And the final point of that is that the miners, we mustn't forget, are also the biggest holders of Bitcoin. They have no incentive to destroy the network or to take control of the network.
Yeah. I'd like to add a couple of things like that. First of all, the idea that mining is centralized in China is kind of an oxymoron, because there's nothing centralized about 1 billion people spread across a massive geography. China itself, there's nothing centralized about it. It's vast. So you can't really centralize something when you spread it out. So that's one. But there is a very real risk, which is the centralization of control over the manufacturing of ASICs, which is a problem right now. There are essentially 2 manufacturers of ASICs. One of them delivers ASICs only in a ISO container scale, and the other one controls the consumer level ASICs across the board. That is a problem. And the way that problem is solved is by the fact that we've reached 16 nanometer, and now there are no more 100x improvements on the table. Now we're slow as Moore's law, which sounds like a silly statement, but in fact, in mining, that's exactly what happens. Interestingly enough, what I'd like to see is companies like Intel, instead of doing enterprise Ethereum Alliance stuff for closed DLT blockchains, build some damn ASICs for us And that would be really, really radical. Getting some of the big chip manufacturers, Qualcomm, Samsung, HTC, Intel, AMD into this game would significantly reduce that very risk. So I'd like to see more of them have skin in the game and be participants in this community. But as you were saying, reaching Moore's law, that's the critical threshold that changes a lot of the centralization trends we've seen. And don't overestimate what miners can do. Miners are one of 5 constituencies. They may seem to have more power than they actually have.
Great. Lou, Astrid, Gavin, Andreas, thank you very much for a very interesting panel and a fantastic day. I think we were all enthralled and entertained. Thanks for keeping the energy up and the interest there. And thank you to hanging out here the whole day with us.